Hello traders, good morning, good afternoon, good evening, good night. It all depends on your time frame, time zone, sorry. My name is Alberto Alvarado. I'm broadcasting this brief podcast webinar. Today is Sunday, July the 10th, 2016. And as usual, and as I commented before, my objective is to deliver at least some brief podcast during the weekend in my YouTube personal channel, so we can keep up with the market updates and the updates on my ideas on the markets for the week ahead. I just wanted to wait for the Asian session to open convincingly. The forex brokers are open so far, more than 2 hours so far. So I believe that it could be time just to deliver this update. Well, I was commenting the latest personal update that I thought that it could be possible to see on the cable gap to the downside. It didn't happen. We analyzed also the Canadian dollar short trade that in the margin accounts we've been holding for more or less a month so far. I commented that it could be a good idea just to close it at the Asian session, or just to wait the first retracement to close it with barely profits. So here are my updates. The cable didn't gap to the downside, but I'm still bullish on cable. I would like to be responsible here and not trying to lead you to open a bull trade there, because we need to be objective. There are still risks that this could somebody says something that is not correct in the UK, and then you could have a sudden drop of 100 pips in the cable. So I'm not recommending touching the cable so far. As informative purposes, yes, I still hold a bullish bias there. I still hold that the 1.28 is the lowest point of last week, should prevail for me to keep that active bullish outlook. The objective is to close the gap at 137, and it's pretty much the same thing in all the pound assets. They all gapped 2 weeks ago after the weekend. So what I believe is that a pound, when it recovers, it will close that gap in every pound asset. The thing here is that volatility, of course, the risks having somebody in the UK saying something very passionate and affecting a little bit the markets. In the other hand, I was commenting that this non-farm payroll number on Friday indicated us that the markets are willing to maybe step aside and patch the page on Brexit, at least for the short term. The markets are willing to start listening to other fundamental news besides Brexit. Because again, Brexit will happen in 2 years, so we have 2 years to start figuring out whatever it means, whatever they decided to do with the Brexit vote. But, I still believe that we will have the gap closed in the near term. Again, not recommending you to buy because the volatility is high, but as informative purposes, yes, my stop loss, let's put it that way, my reference price to hold an active, not a passive, but an active view, bullish view on pound is it shouldn't touch the 128. And the objective is 136, 137. In talking about the Canadian dollar trade, yes, I still hold my my Friday update view that the best thing is just to close that short trade, because after having the NFP on Friday, the market showed us that let's figure out this. The 1.3 in the United States dollar Canadian dollar trade was good enough to stop even Brexit volatility. So it could be considered what we called as a fundamental level, price level. But that changed after having slightly less than expected labor market in the Canadian economy, and a hell outstanding an NFP number in the United States, because that should be signaling that we will have almost for certain, at least one rate hike in the next months before year end. And that changes completely the outlook on why we opened the short trade in the Canadian dollar pair. Again, I try to open trades overall when we're not talking about intraday or scalping trades where the fundamental data is really irrelevant. But when you're really trying to catch the big moves in the markets, you have no choice but to consider the fundamental side. The idea of having the short trade in the Canadian dollar, if you remember, was to short it at 1.3, having the stop loss at 131, and even having the ultimate take profit target in the 1.2. So I was betting for a 1,000 pip drop in the next maybe 6 to 9 months. So, of course, the fundamentals that we had on the Canadian labor market on Friday, besides the good labor data in the United States, are showing us that the risks are for the upside on the United States dollar Canadian dollar pair. So yes, if you haven't closed that trade so far, maybe the good idea is just to wait for the almost sure retracement to the 1.3 area that we should have in the next hours before London opening. You close the trade and maybe revert it. I'm going to share you my, as you know, I try to share you my personal views on the markets. Like this one, the cable, I'm not recommending to open anything there. Unless you're more experienced and you know what to do with this information, maybe decide to go in the direction that I am predicting, or to go against. Remember that it's up to you, and you should take all the risks on opening a trade. Either if I am telling you to buy or to sell, you need to take your decisions, and you must be responsible of your money. You never have to allow somebody to tell you what to do. You need to verify it by yourself. And if somebody says buy and you see that and you're not convinced and you believe otherwise, then it's completely valid to take the other side of the trade. But in this case, in the Canadian dollar, is the at least it apparently is going to be the trade of the week for me. I'm not sure if I'm going to open another trade. That's going to be commented here in the webinars, but at least yes, I am what I believe is the best thing, just to close the short United States dollar Canadian trade now, or at the moment it retraces to the 1.3. If you open the trade in the exact price that I recommended, that in the 130.28, if this price retraces to the 1.3, you will even close this trade in a profit. And so it's a good thing. It's not that big overall. Knowing that we held this trade almost for a month, of course, harvesting 28 pips is nothing, but it's much better to close a thing in profit than in a loss, right? So a profit is a profit, and yes, my idea is to revert that trade at the 1.3, since it worked very accurately as a resistance after Brexit. Is still factoring in the previous labor data of the Canadian economy. That level should provide now a good support to avoid this United States dollar Canadian dollar pair to continue going down. Remember that when you have fundamental or a technical price level that works correctly as a resistance, if things change, those levels revert the value. Instead of being a resistance, become supports. That's what I believe is going to happen to the 1.3. My stop loss there is a 1.29, 100 pip stop loss there, and of course, no brainer to take profit targets, the 1.31. At that point, close half of your positions, then put the rest of your position at break even, and wait for the 1.32. So those are my 2 cents at the beginning of the trading week. So I believe it's a good time just to consider. It's giving you enough time for you to consider these trades, whether you like to follow it or to trade against what I am saying. It's okay. So what I believe is, I want to tell you something. I don't know if I'm going to be able to broadcast today's Dukascopy webinar, but in any case, I am not able to deliver that today. I expect you same time, same place on Tuesday. This is something personal that I need to fix during my daytime hours here in Mexico, very early morning. So if I deliver the webinar, maybe I won't be able to do that. So I just still need to check out some things. In any case, I'm not able to broadcast the traditional Monday webinar in Dukascopy. Expect me on Tuesday. So thanks very much for listening, and remember to trade safe, be safe, and bye-bye.